Welcome to the London session trade summary. As usual, guys, we took quite a few trades in London session today. It was a very productive morning, and so we can't obviously highlight all the trades, but have a look at a couple here that we got into in the live room. What we are looking at the moment is a pound-dollar 4-hour chart, and if you look in this area right about here, what do you notice there? That is a beautiful evening star pattern. Right off at 200 as well, very good looking pattern. What also spurred us along, usually we don't trade into the face of support, guys, the 23 there, but we don't really hold a lot of weight onto the 23. We don't trust that much, but the fact is that we saw it break back inside this declining trend line, that black trend line, and so it gave us a lot of indication that we're probably going to get some more downside. So what we were hoping to do is see a retest of 160-100, and this blue candle here gave it to us, so we got in short at 160-100, and then we got out off the 21 EMA as support, and so we took a good 40 pips off that trade. Then as we watched it progress throughout the trading day into New York session, what happened was we had a breakout again, and when this breakout and this candle closed, if you look down to the corresponding MACD pattern, what do you have? A beautiful blue trend continuation pattern on the MACD. So we had a TC pattern on the MACD. Remember, we don't like to see a TC pattern after, let's say, 5 or so bars. We don't mind 3 or 4 of the opposite color. So if you get 3 or 4 contrary colors and then a TC pattern color after that, well, that's a good pattern. So we jumped in along on the retracement of that candle. Now let me just show you an advanced way that we did this. If I zoom in here for you, because it was a breakout trade and because it was below the 200, this is what we did. We took a Fibonacci of the entire candle like that, and we were hoping for a return down to the 50%. As you can see, it was just shy of that, but because the 8 EMA was there, we took it off the 8 EMA, we got in long. Stop loss just below the 100% down there, so just below the pattern, the signal pattern. And what we did was we took our profit off the table at about 60, so we took another 40 pips off that trade as well, which was really good. And so we enjoyed that pattern up there. We were bullish on the pound, so we weren't surprised when that happened. The first trade was a counter trend trade because, as you can see, we're in a little bit of a bull run, so this one carried a bit more weight. We were happy with that 40 pips off there, so 80 pips off the pound alone, which was really nice. Have a look at what we're still in here on the pound yen. Seem to be considering the pound pairs a little bit more in the London session these days. So this is the pound yen 4-hour chart, and you'll notice that we're in a trade at the moment still. We're still in there, hanging in there for the moment. It came real close to our stop, guys, and this is exactly why we put the stop under logical levels. We got the stop below the 89, the 365, the trend line, and the 200 EMA. Now if we had put it in between there, we would be out of this trade. If we had put it somewhere else, obviously it would have touched us out on the trade. So that's why we put as much in between our entry price and our stop loss as possible. So we put it down below the 200 here, and as you can see, it came close but didn't quite get us out. We're still hovering around there. It looks like about -5, -10 pips at the moment. But why did we enter this trade? Well, let's go down to a 1 hour and I'll show you exactly why. Let's go to a 1 hour chart and have a look what you're looking at right there. Beautiful bullish pin bar. Now, strictly speaking, guys, remember the MACD is below the 0 line, so we don't ordinarily go for a bullish trade against the trend. It's a downtrend, and the MACD is below the 0 line. But we'd made 80 pips off the other one. The risk on this one was low because what we did was we pared down our lot size, and we said, look, it's an hourly pattern, not a 4-hourly pattern. A couple of guys wanted to take the risk. I decided it would be a good idea as well, so I thought if I lose this here, I must not wipe out more than 1/3 of my profits I took today. So if this one loses, 1/3 of the profits of today's 80 pips are gone, but the rest are still locked in in the bank. So that's why we took this trade off that bullish pin bar there. Let's see how it goes. It's got a bit of resistance in that 365 and this trend line, but if you go back up to the 4-hour chart, you'll notice, let's just get back to the 4-hour chart there quickly. You'll notice that we haven't closed outside. We've got another half an hour for this candle to close. We're really hoping it comes back inside the triangle and closes inside the triangle to get a bounce on the 4-hour and a continuation back up. Our target, guys, is going to be roughly on this trend line over here. Wherever we see it hit this trend line, that's where we'll take profit. We'll take probably about 3/4 or a half of the trade off and let the rest ride.